Understanding if the market is going to reverse or continue with the trend is crucial if you want to align yourself with where the price action is going, and having indicators that give you the signal to, oh, this is time to reverse or this is time to continue the trend. These indicators are very important. If you're new to the channel, subscribe. Let's jump into the video. Alright, so I'm not talking about the Ichimoku and all the moving averages, all those indicators. I don't use those indicators. I don't recommend using them. If my opinions change in the future, I will surely change my opinion. So how do we look for signals that we are having a reversal or a continuation of a trend? Now, you have to understand how a trend forms. So if we look at how price action moves, say for example we are moving in a downtrend like this. So price is breaking lower lows, lower highs, and once we break a lower low and then we break a higher high. So if we look at this area, so price breaks both of these regions, you can surely expect price to continue high. This is one signal that I personally use to look at reversals. But how do we identify reversals, potential reversals, reversal areas on the weekly time frame? So Monday sets the high and the low of the week. That is just by default because we are starting a new week. So once Monday sets the high and the low, assuming on Tuesday price breaks out of this high, I'm looking at how does price close on Tuesday. If we close back inside of this range, then in my mind I start thinking that okay, price might continue going down, and this forms a head and shoulders pattern if it follows my thesis. Now you have to keep in mind, price, you cannot control price, so it's a game of probabilities. So the first signal that I look for is called a failed breakout at the high of the week. So a failed breakout is price breaking out of the high of the week or the low of the week and closes back inside of the range for a continuation on the next day. Now, once we have a failed breakout, so let's assume this is the low of the week. So we had price breaking out Monday, Tuesday, Wednesday we have a failed breakout on the and closes back inside. Now on Thursday I'm looking to continue with this trend. Now unless we go back to this low or come back to this high and break out and close outside of that range, the only thesis I'm coming to the screen on Thursday, on Friday is going down. Even if on Monday we open again, I'm looking to sell. So that is a signal for continuation. Now once we come back to this low and fail to continue breaking this low, close back inside of the range, then I'll be looking to continue to buy up until, say for example, this was the high of the new week. So if we close outside of this range and then close back inside, then I stop buying. Let's look at examples on just random examples. So we have Monday setting the high of the week. On Tuesday, price breaks out and closes outside of the range of the week, meaning I don't have a failed breakout. Now assuming I don't know where day one is, where we have that first day of reversal, what I would be doing, I would be waiting to see, okay, what is price doing? and then price breaks out. So on Wednesday nothing really happens, it's an inside day, but on Thursday price breaks out and closes back inside of the range. So I start selling. On Friday I'm selling. On Monday I'm selling. So I don't know how price will behave, but on Monday I'm selling, but I also draw my high and low of the new week. On Tuesday we break out, close back inside of the range. I start selling. We have price continuing to sell on Wednesday, and let's see how Wednesday closes. So Wednesday closes inside, so I would be looking to buy on Thursday to because of this potentially new trend that is forming. Now if Thursday fails to continue closing inside of the weekly range and closes outside, I start selling again. So on Friday price continues to sell, and then on Monday I'm continuing to sell, but again on Monday I redraw my new high and low of week. On Tuesday we have a failed breakout. So failed breakout at the high, I continue selling. I'm selling on Wednesday. Price breaks out on Wednesday and closes outside of the range. I continue selling. On Thursday, on Friday I continue selling. So again like that. So coming to the screen again on Monday, I'm looking to sell because I don't have any buy signal. On Monday I'm setting that high there, and I mean that low there, that high there. So what did price do? Price starts to continue going higher. Now in my mind, if I'm not sure what I'm supposed to do, like for example in this case, price started going up and it has broken Thursdays. This is Monday, so Friday price has already been broken that high. So what do? I'll just wait for Tuesday to close inside or outside of the range. Then I'll just wait for the failed breakout. Simple as that. That gives me a thesis going on Wednesday, on Thursday, and then if we have another failed breakout, that is a signal, a reversal signal. And if we don't get the reversal signal, that means we are either looking at a continuation of a trend or price just consolidating, which in most cases price cannot. I've not seen price consolidating for more than 3 days. So price will consolidate on one day and move the next day. Usually the probabilities are very high. So this is how I identify reversals on a weekly template, and that is my signal. The failed breakout is my signal. So go back test it, check it out, see for yourself what I'm talking about, and yeah, if it works for you, it works for you. If it does not, cool. Anyway, if you got value from today's video, subscribe, hit the link in the description for the free mentorship program, and I will see you in the next video. Peace out.